We have to figure out what's going on. There's something going on, and it's bad. There's a problem. There's something wrong. Something's going on. We've got to figure out what's going on. Bomb. We have to find out what's going on. I called the mayor. I said, what's going on?
Indeed, what is happening, people? All right, so yesterday, the stock market was just a sea of red. Oh my God, whoa. Amazon, the big names, Facebook, as well as Apple, their stock prices have dropped for at least 4 to 5 to 6% respectively. So tech was the biggest bubble of all. Okay, the tech has rallied more than double this year alone. Okay, if you look at their 5-year charts, they have been growing steadily, but this year was just a boom explosion. Okay, so this leads to kind of a tech bubble forming, and there's been some crazy valuations that's been forming around these big names. And I do think that going to the elections, this tech bubble could potentially be burst by this catalyst, which is the presidential election. Okay, so tech was the huge sector that everyone was flocking to. Okay, the hot sector that everyone was throwing their money in, and funds like ARK Invest have been doing really, really well. But however, as this bubble starts to deflate, if it happens, and what is the next big industry that we are supposed to look into? And that's what we're going to be talking about today. And today, I'm going to be exploring with all of you and take you on my journey to find what is the next big hot sector that I feel that is a little bit undervalued and we should get into it or start a small position soon, as the market is tanking and there's opportunities to be found. Let's get into it. This is the Stock Estate, and I'm an ex-financial advisor, and today we're going to be talking about Invesco Solar ETF. Okay, so renewable energy has been one of the hottest sectors over the past few months as growth accelerates and potential incentives may come into play, depending on the election results. Okay, so there is a shift from fossil fuels to alternative energy to allow for growth for the renewable sector for a long time to come. As you can see, the renewable energy has already been one of the hottest sectors in the last few months, up nearly 100% at highs over the last 6 months. Okay, some of the biggest names in solar are Sunrun, Enphase, Vivint Solar, and Jinko Solar. Okay, which has reached records over 300% year to date at their peak. Okay, there are a few driving forces which makes me think that this is a really, really good investment to be in, because we see a shift from traditional fossil fuels to alternative energy such as wind, solar, hydrogen, sooner than expected. And you can see that both presidents during their presidential debate, they also have mentioned a little bit more about green energy, renewable energy. And so no matter the outcome, who wins, right? I feel like in the midterm to long term, this sector will definitely flourish, and I can see money being moved and transferred over there, because as you see, although the market's tanking now, the money doesn't just disappear. It doesn't just puff like that. It's a zero-sum game. So the money is probably being transferred to some other sectors, or people are just holding it in cash, and this cash will probably flow into some other sectors if fear continues to revolve around tech or the big names, and they feel that it's still too overvalued, and this money will actually flow into other sectors. Let's look at what's Invesco Solar ETF, which is the ticker symbol TAN. Okay, TAN offers a unique and popular take on renewable energy. Okay, it holds a concentrated portfolio of companies in the solar energy sector. Okay, so it's it's pretty niche. Okay, because I feel that the solar energy sector are the ones that are more viable and can generate more revenue and can take up more of the market share compared to the wind and hydrogen resources, which may take actually a longer time. So this ETF actually gives exposure to purely solar-related activity. Okay, and the resulting portfolio is pretty concentrated. Okay, it's holding just a handful of names. Okay, it's very overweight in the US and China. Okay, its top 10 holdings are actually Solar Edge Technology, Enphase Energy, Sin-E Solar Holdings, First Solar, Jinko Holding, Sunrun, Deco New Energy, ASA, Canadian Solar, as well as Enclave AG. Okay, so my take on this, right? So the US companies are more, I would say, more safer, but would actually give up a little bit lesser gains. Okay, but the China companies are actually the ones that are really up and coming. Okay, so for example, like JA Solar, Canadian Solar, they have been one of the biggest wins Okay, but however, the concern that I have of these companies, right, over the long term is that they're heavily dependent on support from the Chinese government. Without that support, in the form of unsustainable subsidies, it'll be quite impossible for them to remain competitive. So yeah, I feel like this industry is quite heavily reliant on the government funding, but government funding can be really, really strong, as you can see from the example of NEO. Okay, so yeah, in fact, they plan to. The trouble that is here that is I'm afraid of is if they cut off the funding, okay, these companies might undergo some really steep drops. Alright, but however, there is no evidence that China is looking to relent on its dedication to the domestic solar industry. In fact, China's officials have announced that they now plan to more than quadruple China's solar capacity to 35 gigawatts. It's pretty strong. Okay, I would say that the industry now is pretty strong. So, however, if you do not want yourself to be too overweight or exposed to China, right? So I feel like that's why this ETF is pretty good as well, because it gives you a nice exposure to both US as well as China. So what exactly does the solar industry do? Okay, they build and install devices to capture energy from the sun and convert it into electrical power. This sector encompasses a wide variety of companies with the following functions. Okay, firstly, they can do manufacturing, which is manufacturing components and panels. They can do installing of solar panels. They can operate solar energy generating facilities. So these are one of the many, many things that the companies are doing. Okay, so I feel like if you don't have time to go into every single individual company, right, to go and check out the financials and everything, I would say this ETF is pretty good to capture the entire market, entire sector. So you'll be gaining as an entire sector. Although if you do have time to research into individual companies, the gains will be much more. But however, I know all of you are pretty busy and sometimes you do not have the time to research into individual companies. This is the ETF I would say is very suitable for you. Okay, so all in all, right, I would say that this market is very, very heavy and has a lot of potential for future growth. According to the International Energy Agency, the global renewable energy capacity is on track to expand by 1,200 gigawatts from 2019 to 2024, and solar powering 60% of that growth. Okay, to put that growth into perspective, right, 1,200 gigawatts is equivalent to the entire total installed capacity in the US in 2018. Wow. So if they grow by the number, right, is increasing the energy by another 1 power, okay, another power. Is equivalent to the total installed power and electricity in the 2018. Wow, can you just imagine that? That's almost a double. It's saying that it's going to double. If everything goes well, it's going to double. So it's a huge market, I feel. Okay, so how will I play this? For me, what I personally will do, okay, I will start a small position right now. Right before the elections, you heard me right, probably Monday, I'll start a small position. And right after elections, it might have a small pop. And if it does, okay, I might sell some. But if it doesn't, okay, I will be looking to add on to my position over time during the red days of the entire market. When the entire market brings that ETF down as well, I'll be adding my positions, okay? And I'll be holding for around 6 months to 7 months, and I'll be reviewing my investments then. So I'll be roughly buying and holding until next year around June, and I'll be looking to capture a nice swing of that initial excitement on renewable energy. However, okay, I do want to caution that, why am I not holding this for the super long term, this ETF? Okay, because there's one thing, okay, there's one small thing inside here is that there is this ETF, right, although it offers adequate liquidity, right, it charges a pretty steep fee, okay, and this fee is pretty high. Okay, let me just take a check. Their fee is around... The expense ratio is 0.71%. Okay, it's pretty high. Okay, so for a long term, right, if you're doing for a short swing trade, right, so maybe 1 year, this 0.71% of expense ratio is pretty good. Okay, the expense ratio, if you guys don't know what it is the amount of money that the fund charges you for, buying into their funds, buying into their ETFs. So for example, if you earn 3%, actually you will minus 0.71%. So for the initial pop, right, for the initial phase where we have a lot of gains, okay, I feel like this 0.71% over 1 or 2 years isn't going to be much. But however, the power of compounding. So if you do hold this for the super long term, like 10 years, 5 to 10 years, right, okay, this 0.71% will add up and it will be a pretty steep amount. So hence, I will not be looking to hold this for more than 2 years. Okay, so I'll be looking forward to be some kind of a midterm swing trade. And after that, if the industry is still booming, right? By then, I'll have done all my research on the individual companies, and by then, I'll probably pick a few companies from this ETF and I'll invest in those instead. And by buying individual stocks, I won't have the expense ratio being put on me, and hence, it'll be good for long-term investing then. So, but for now, okay, since I do not have the time yet to go and look into individual companies and the do's and don'ts, because I'm a pretty careful investor, I would say this ETF, I'll buy into this ETF, to sort of capture this opportunity first and concentrate into a few stocks in the future. Okay, so what are the do's and don'ts? Okay, so who will be looking to get this ETF? Okay, so I would say based on my experience as the next financial advisor, okay, so if you're already overexposed to the renewable energy sector, like Next Era Energy, and you have a lot of more than your allocated portfolio risk towards this sector, right? Then I would say do not get into this ETF. Okay, there's no point. Okay, you already have captured a nice part of the market, and we do not want to overexpose yourself into more risk buying into this ETF. But however, if you have no positions in the renewable energy sector, okay, what I would do is I would probably start a small position. Okay, so yeah, and if you are a trader, right, okay, I would probably sell on huge pops around 4 or 5% after the election, okay, and look to get back in on the swings. Okay, so by then, okay, I'll probably release some videos about my swing trade techniques and how I'm going to trade this. But this video generally will be for the midterm investors, mid to long-term investors who are going to invest in this ETF for the next 6 months to 1 year and probably can capture quite a bit of gains during that time. So if I'm still a financial advisor, I'll definitely be recommending this to my clients. I'll be calling them up, sitting them down, and introducing them, like, how am I doing right now, telling them what this ETF is and its potential gains and risks. And yeah, so you should do your own due diligence and, look into it, okay, and decide for yourself, whether you should, open a small position in this ETF. All right, so thank you very much for watching to the end of the video. Okay, I really appreciate if you smash the thumbs up button and subscribe to this channel, for more videos like this, and welcome to the community for the new subscribers. All right, as usual, okay, this is a stock estate telling you to be an investor with a plan. Oh yes, and also, if any of you managed to do deeper research into individual companies that made up the ETF and found some pretty good ones, please do let me know in the comments below, and I'll be sure to look at it as well. And I'll just thank you in advance. See you in the next video. Stock estate out.